We're smooth 98.1 FM. Good morning and welcome to Business Express. It's time to get into everything business as we invite our special guest, Samson Owolabi, Associate Research and Portfolio Management, Zedcrest Wealth. Good morning to you.
Yeah, good morning. Thanks for having me.
All right, for us this morning, we also like you. We know it's a public holiday, but then those who will get ahead when the holiday is over, those who begin to project somewhere on the fringes of their mind of what to do after the holiday. That's what you would see eventually. So I ask you to be part of it. Just be sure to send us a WhatsApp message on 0809 444 0981. We're also streaming live on youtube.com/smooth 981 FM Lagos. Search for us on YouTube. Subscribe to the YouTube channel. Leave your comments there. We're sure to pick them up. So let's get into issues relating to the currency. The Central Bank of Nigeria sells dollars to BDCs at 1,101 naira to a US dollar. So, Samson, this morning, let's look at the CBN going from selling at 10,000 US dollars to BDCs at 1,300 naira to the US dollar to this latest amount. What is making the CBN act this bold to force down the rates?
Okay, so thank you very much for that question because it's like the major news in the town now. And when you look at it, the major reason behind this is just the CBN trying to regularize the FX markets. It's not really much about maybe they are trying to do something else. They have seen the way inflation has been going on an uptrend, having an uptrend rather, and that uptrend is not really healthy for the nation. So I think they have a mandate to keep inflation abated and to the lowest level, and that is what they're trying to do. So they're just trying to find ways to make sure that the Nigerian currency regains its value, so that the aspects of food inflation, imported food inflation, that one is going to be reduced, and then we're going to see a normalization in the inflation figures. So those are it's part of the major reasons why they took that particular step.
So, but they can dictate the rates to the parallel markets. So what's the foreign exchange sales to BDCs are not new. Why would this time be any different from what we've seen in the past?
Okay, so on the rates, when you say they can dictate rates in the parallel market, I beg to differ on that. And the reason is that, parallel market is supposed to show the major, like let's say the forces of demand and supply, the price achieved by the forces of demand and supply. The official markets can be, it can be it can be structured, it can be pronounced, and it can be controlled and fixed at a particular rate. But the parallel market is supposed to be the market that the government doesn't really have the autonomous, let's say, control over. They don't have that autonomy on that particular market. So it's not as if maybe they want to control the parallel markets. And also, when you look at it, there is a point where you need to let the true value of something to reflect yourself, in as much as you can peg the price of a particular currency at a rate. You have to let its true value come around, or else there's going to be the large disparity between the official market and the parallel market, which is what we've seen over time in the past, especially last year, during the era of the past administration and Governor Emefiele. So when you look at it, those are the kind of environment we were in then. But currently, right now, the environment we are in is the environment of let this reflect the prices. Let it reflect where the naira is compared to the dollar. So they are not controlling the parallel market. It's not even advisable for the government to do something to control the official market. They can have a little bit of control over it just to balance things off. But what they're doing right now is just they're trying to reduce that volatility. And the way they're doing it is selling at a rate that is even quite lower compared to the rate that we're seeing in the parallel market, which is going to drive down the rates that are in the parallel market, and the naira is going to appreciate further, even at a faster pace.
Bouncing off of your last submission, allowing things to reflect their true value, see where it brought us, and see how we are trying to stem the fire that's generated right now, which leads us to the issue of the issue of defending the naira against the US dollar. And it's been said now that it's close to about 1 billion US dollar has been used in the last quarter to defend the naira. Is this sustainable?
Okay. Well, on sustainability, the short answer is no. But let me explain something. Let me just dive in a bit. Now, when you say foreign reserve, one of the major reasons for having a foreign reserve is to have it to cushion cases like this when there's volatility in the FX space, or when the country's currency, when its value is declining at an alarming rate. So what they're doing, the CBN using the FX reserve, the decline in the FX reserve, as we've seen right now, is not entirely bad. It's not a bad thing. However, all we just have to understand is that it is not something that we can be doing over and over and over again. If we keep on doing it at this pace, then we're going to run dry of our FX reserve. You get, but one thing we can just do is that you can use it to cushion the market at a particular point when things are normalizing, when things are going better. You can just hold and then see how things are going to be. But the major factor, the major strength still remains in us being able to have enough dollars, being able to have enough revenue from exports, being able to have sustainable investments that in dollars that is going to like make us to be able to like supply and cover for the demand for dollars.
All right, let's get back to the listener now. Oh, you can be part of this conversation this morning if you send us a WhatsApp message to 0809 444 0981. And this morning, it's all about the CBN sells dollars to BDCs at 1,101 naira to a US dollar. You know where it used to be. And they say, put your mouth where your money is. So put your mouth where your dollar or your naira is at this moment. Austin, I see your message, but let's get on to the next one. The CBN has issued yet another directive to banks to stop accepting dollar collateral for naira loan. Can you explain the reasoning behind this?
Well, so about that, I think it's a good one actually. And in as much as we've seen a lot of like policies rolling, a lot of circulars rolling in rather, it's still for me, I believe that particular move is still a good one. And I'll explain why I believe it's a good one. Now, when you look at it, I want to look at it from the aspect of like, let's say you want to like obtain a loan in a bank. If you want to obtain a loan in a bank, the collateral that you will need to obtain that loan in the bank, most times, even oftentimes, is always more. Its value is always more than the loan that you're acquiring. Just to like give the bank this kind of a so-called that you're going to repay them. Now, when people do stuff like this, we are always when they use dollars for naira collateral, we are already instigating that the dollar is more valuable than the naira. That's number one. Number two is that people often use this to like speculate, and it tends to lead to a situation in which the naira will fall more. Because look at it as in this aspect, you put in a lot of dollars assets, or maybe it's an asset, or maybe it's in cash, and you're using it as a loan, and you're leaving that dollars. There's supposed to be an inflow and outflow of dollars, but you're keeping it in a place, and then once you keep it in that place, you're going to limit the amount of supply in the market. And when you've limited the amount of supply in the market, the naira is going to depreciate. So it's one of the major things that is affecting us actually. So, or however, if you are selling the dollars just to meet your naira obligation, the naira is going to appreciate more. So that's why I believe what the CBN is doing is actually a very good one. It's still a good one for that. I believe is a positive one, and it's going to still see. We are going to see the positive aspect of it. So it's not really let's say having dollars as collateral for naira loans is not really okay. It's not really all right like that. Even having naira as collateral for naira loan is still better. And when we talk about instrument, although they made a particular, let's say, exception that except that dollar is for like maybe Nigerian euro bond, which is very, very good. That one is still like okay, and it's still like all right.
All right. Well, it looks like now there's a 101 you've given us this morning. The dollar was never meant to be static, nor any money meant to be static. Money must keep moving and changing hands. That's what it is. Let's
Yes.
get on to the next idea. Looking at it from the perspective of businesses now that wants to protect against naira depreciation, does it make sense to use the dollar as a collateral?
Yes, it actually doesn't. So now another thing I want to like state now is that there has to be balance. There has to be balance. In as much as you want to use that as collateral, you must also have a sizable part of naira assets as collateral. But in the market right now, when you look at the way things are, we don't have that balance. So for businesses, I believe if we have that balance, it's going to be okay. But for now, with the rate we are at which we are concerning how the naira devalued over time, I believe we should scrapping that is good for businesses, is good for everyone.
This leads us to getting forecasts now. So, can one forecast that if we have exchange rate stability, maybe then we can use the dollar as collateral for companies will be less inclined to use the dollar as collateral for the naira loans.
Okay, yeah. So about that, now I want you to look at it from this perspective. Let's say you have like $2,000, you put it in a bank and you just use it to get like a thousand naira loan. At the rate at which you use the $2,000 as your collateral, dollar to a naira was like let's say maybe 2,000. Let's just use that. That's
The benchmark.
that benchmark was at 2,000 naira. Now after like a month, dollars weakened against the naira, went to like 1,900. The value of your dollars is depreciating. Once the value of your dollars is depreciating, it is like a risk to the person, like to the company, like giving you that loan, because they believe that by the time they convert that amount of money, they will be getting less or lower value. So stuff like that, if the naira is appreciating on a daily basis, that motive of using dollar as collateral is going to is going to be forfeited. The reason why people keep using dollars as collateral is because they believe that naira is always going to depreciate, which is why we are seeing more and more and more of it, and then naira keeps on depreciating. But at this current level right now, if the naira keeps on appreciating, then using dollars as collateral is not really going to be the case now.
Well, we're almost there. Now, let's get on to what do you think about happens to the exchange rate as we approach the summer period? And you know what happens during summer and people travel more. Also around August, September period, the foreign exchange school fees are due. Knock, knock. So what's going to happen? Your forecast.
Well, I want to look at it from a balanced approach. And number one, yes, there's going to be more supply in the market currently, right? As in more demand for dollars rather around that particular period. A lot of people are going to pay for school fees, not just school fees alone, housing, feeding, and the likes. So that one is there. However, I want us to look at it right now. Recently, UK released some laws concerning their immigration policy, and they restricted a lot of things, and there was a significant drop the amount of Nigerians going to the UK just because of that law. Same thing happened with Canada. Same thing is going on with the US. Now, when you look at these laws, it is already showing that the number of people that are going to the UK, to the US is declining, and Canada also, especially the UK. And you have a lot of Nigerians studying in the UK. So when you see these instance, you realize that there's going to be a relief from that particular place. There's going to be a relief. So when you balance out the factors that there's going to be a relief from there, and looking at where things are currently also, you realize that we're still going to be in a good place. Another thing I want us to note is that the UK economy now, I'm using the UK right now because the relationship between Nigeria and the UK. So, and even though we still want to convert naira to pounds, there's still a dollar element in it. We still have to pass through the dollar part. So everything is intertwined. Another thing we now have to look at is that US and the UK, the UK economy right now, they're in a recession. There's a possibility that they will start cutting rates early. When they start cutting rates, same thing with the US, if they decide to start cutting rates, what that means is that we are going to see this kind of like a depreciation, a little bit of like reduction in that the value of the currency. So when we see something like that happen, probably there might be a reduction in the value of that currency. So when we see something like that happen and the rates at which our interest rate is, there's this carry trade opportunity for investors. It widens the carry trade opportunities a lot for them. So we are going to be seeing more of them coming to the Nigerian market, possibly, and then this is going to increase the value of the naira also. So when you balance all these factors, you realize that let's say that fear might not really be that much. We might not really see that depreciation in the naira, although we are still going to see the impact, but it's not going to be that aggressive and that alarming.
On a final note this morning, I know I introduced you as your portfolio in terms of Zedcrest and all of that, and of course, Samson Owolabi is your name. I didn't say you were Nostradamus, but I risk you now to help us look into the crystal ball or probably the mirror or probably the water in the basin right now. Look into it and tell us, do you see can we fall below 1,000 naira to the US dollar in the near future? What would need to happen for this to be?
Okay, so about that, yes, we can. Like it's a simple thing. All these things are mathematics and economics, just the law of demand and supply. It's very like it's very straightforward. How can we fall to that place if we can have more supply, if we can have more like exports earnings, increase export earnings, 81% of our export is just crude oil. Imagine what we can make from other mineral resources. Imagine what we can make from agriculture. We used to have a larger chunk of our export from agriculture. So if we could, or if we can solve that aspect, if we can increase our export earnings, we'll be okay. We'll be in a very good place. Also, if we keep rates elevated at the rates at which they are right now, the naira is going to like have more appreciation in its currency. We are going to have that carry trade opportunities for investors. They might flow into the Nigerian markets. And currently, right now, the carry trade opportunity is like the brightest in Nigeria compared to other countries. So if things keep on going the way it is, we can. It's possible. It's something that is attainable, but fundamentally, we need to increase our export earnings. That's where it lies.
All right, thank you very much. That's more of Samsonomics this morning for all of this insight. Well, let's go over to a few messages I've got here waiting before we say our final goodbye. I see Final Luboroko's message, and it says the CBN governor is really trying to in controlling the dollar volatility, and we are seeing some positive results. However, for these gains to be maintained or improved upon, there is more work that needed to be done on the fiscal side. Fine Oluboroko's thoughts this morning. And then Francis Yu comes up saying the zero net open position policy of the CBN in the first quarter of this year did not support banks holding dollar-dominated collaterals of customers, as it will ultimately tie down the bank's asset and affect the bank's ability to comply with the CBN policy. So is this also reinforcing what you talked about earlier on, Samson, briefly?
Yes. It really does. It's like it's part of the conversation. I wanted to even make mention of that. Maybe just keep my mind. It's really part of it because that net open position it really went a lot of ways. You saw a lot of banks selling off a lot of dollar assets. They have a lot of it in their books. So it was a very good one. It's really making the changes to happen in the market.
And as for Austin, finally asking, please, I would like to know if the public holiday continues today. Yes, it does. Austin from
Yes,
Satellite.
it does.
It does. And these are the class of people who want to throw in. There's a temptation for the likes of Austin to want to throw in. Talk to your HR to see if you can throw in Friday into it, but don't say I sent you. But we want to say a big thank you to Samson Owolabi, Associate Research and Portfolio Management, Zedcrest Wealth. Thanks for your time today. Have a great day and
Yeah,
rest well.
thank you very much for having me.
And that's the size of Business Express on Smooth 98.1